All right, welcome back to the show. This is Jim Oliver, and with me today, I'm excited to have Greg Dickerson. Greg, welcome to the show, buddy.
Hey, Jim, thank you for having me.
Yeah, Greg is a real estate expert and has some unique background and ideas and thoughts, and we're trying to find, Greg, for the audience, the right fit and the right sector, and I wanted you to talk about that in real estate. But before we get started, tell us a little bit about you, your background, kind of how you got to where you are today.
Yeah, so I am originally from Virginia Beach, Virginia. I live in Charlottesville, Virginia now, and I did not go to college. I joined the Navy right out of high school, and after I got out of the Navy, I did two things. I did real estate, or I did construction and restaurants, the only two things that I ever did. And I'd be working in restaurants at night and doing construction during the day. And I got started in the business as a builder. And I was working in this restaurant, and this guy was doing an addition on it, and he hired me to come clean up after him. And he took a liking to me. I'm a hard worker, so I started following him around on different job sites and learning some trades and learning how to do some commercial construction. So fast forward, I'm out of the military. I'm done with my restaurant career. And I moved to a place called the Outer Banks of North Carolina, which is the Hawaii of the East Coast. I'm a surfer, lifelong surfer. I've been on the ocean my whole life until I moved to Charlottesville. And so I moved there, and I moved there to open restaurants. And I worked 1 year in the restaurant industry down there and did not like it at all. Very difficult, very seasonal, short term. And you couldn't get any help. This is back in 1997, before the foreign exchange student thing was a thing. So anyways, I was trying to get an addition built on my house that I bought there. And never really invested in real estate. That was my third home that I'd owned. But I never did it as a business or as a business model. I was trying to get an addition built. Nobody would call me back. So I was talking to my neighbors, and they said, man, everybody's so busy, nobody can even return a phone call. And I said, well, where there's a problem, there's an opportunity. I had some skills. So I said, I'm going to start a construction company. And I started doing little remodeling projects, handyman projects. My first year, we did $250,000 in sales. 7 years later, I was the largest builder, developer in the area, doing $30 million in sales. And I learned how to do a lot of different things along the way with that. But basically, that's how I got started. I got started as a builder, remodeling contractor, and then I started doing some real estate investment deals. My first deal was a lot flip, made about $15,000. Thought that was just, I was lighting the world on fire, and I didn't even know you could do that. And kind of, pinch me, is this real? And then I started doing some land development deals. I started doing some commercial projects, started doing some deals with some other developers in other areas, and just kind of learned along the way how to do commercial land development, bigger projects, multifamily, things like that. And, just kind of working with some of these more sophisticated developers, learning from them. They were coming down, building houses on the beach, and I spent a lot of time together. So I kind of learned through them. And then I also educated myself along the way. So even though I didn't go to college, I'm very self-educated through books, seminars, books on tape. My iPhone doesn't have one song on it. It's got books on tape. Before that, it was the iPod 80 gig. I still have it, the old hard drive iPod. Yeah. Before that, it was CDs and then tapes, right? So that's how I'm wired. I'm always pouring into myself, always developing myself professionally, personally, as well as vocationally.
That's awesome, Greg. It's funny you say that about education because, we like to ask kind of where we're at in South Dakota. We are a no income tax state. So our neighborhood is packed with doctors who like to do procedures in South Dakota so they don't pay tax on that. And they're smart. We have a lot of clients that are docs or retired docs. And, we ask them, how many years do you go to school? And, it's around up to 17, right? Or they're in that range. And ask them, how many business or economics classes did you get? Zero. It's zero every time, but they're going to be running these multi-million-dollar businesses. And but they're becoming they're a doctor. They don't have time to learn how to do this stuff and educate themselves. So they always kind of get taken over their lifetime. It seems like more than most people in some kind of investment venture that doesn't work out, or, they're buying, franchise restaurants or something like that. And they don't educate themselves, but we don't get this education in school. You could have an MBA, and I guarantee you don't learn about real estate. You don't learn about how money really works, and you don't learn about banking, right? I mean,
exactly. And, along the way, during that journey from 1997 till probably 2005, in addition to doing the real estate deals that I did, I also started 12 different companies from the ground up along the way. They were all ancillary and residual to the building business, pool, spas, landscaping, hurricane shutters. I had some restaurants. I had electrical company, painting company, things like that. So I had a plumbing company, and usually it was because of a problem, right? Somebody was either struggling in their business and they saw what I'd done, that I was very successful very quickly, and they would come to me for advice or to partner with them. My pool, spa, landscaping guy was selling me pools and spas. He was with another company, always wanted to start his own business. So he came to me and said, hey, here's what I want to do. So we joint ventured, and I put up all the money and the expertise and coached him, and then he built that into the largest company down there in a very short period of time. So I helped him do that, as well as the plumbing companies, other businesses. So all that to say, in Charlottesville, we have one of the top business schools in the country. It's Darden Business School, MBA program. And I was over there for the launch of their, what they call their iLab. It's their incubator lab to incubate startups, right?
Yeah.
So I'm over there talking to them. I've got zero college education, went in the Navy right out of high school. And I'm talking about my career and my path and starting all the different companies. And several of the instructors and I are talking, and they look at me and they're like, well, how did you start 12 businesses? I'm like, well, what do you mean? They're like, well, how do you start a company from nothing? And I'm like, well, isn't this a business school? I said, no, what they teach you? They said, well, no, we teach, higher level, thinking and analytics and theories. And, we look at other companies and case studies and things like that, and show you how to build financial models and things like that and run pro formas. And I said, I've never built one pro forma in my life. I said, I pay people to do that. And I didn't even go to college. That's what I have my accountants, my CFO, I hire experts to do that for me. I've never built one financial model myself. And, so it was really interesting. And I said, well, I started talking to them about how you actually start a company from nothing. And, it's an interesting thing, how to create something out of nothing. Well, that's what entrepreneurs do. And here I am at Darden Business School in front of the iLab, the incubator lab for entrepreneurs, so it was really, really kind of a fun day. And we had some good conversations, but, I have a lot of friends who are physicians and do a lot of business with doctors and physicians, and they're very busy. They're very focused. They have a very good income. So they are targets, for, wealth managers, people doing deals, investors, things like that. So a lot of times, what these guys will do is they'll go buy something and thinking it's going to be easy to run, and I'll just run it myself. And, whether it's an apartment building or a mobile home park or self-storage, whatever it is. And oftentimes it's nowhere near where they are. And they think it's just going to be, really easy. Everybody's going to pay their rent, and I'm going to pay the mortgage, and I'm going to make all this money. And, those things are a business. Each individual property that you buy, it's like a mini business. It's income and expenses. It's dollars in, dollars out. There's a management component. There's people involved. Even if it's self-storage, that's a retail business, right? A lot of people think, man, that's great, there's nothing to do. Self-storage is retail. There's a lot to do. Same thing with multifamily, same thing with office, same thing with industrial, retail, whatever sector you're in of classes of commercial real estate, each one of those things are a business in and of themselves. So you've got to run them like a business, or you have to have an organization or an infrastructure that can run them for you like a business and keep track of it. So you can do what you do. If you're an orthopedic surgeon, man, go do what you do, make more money doing what you do, and then partner with an expert or somebody like that, to work with you, or hire, a team that has infrastructure to manage your assets. Last thing you want to do is try to step outside your expertise and go get into something or do something that you just really don't know anything about and you haven't really educated yourself on, because it takes a lot of time. I mean, I'm 21 years, in my career of doing what I've done. I've done over $200 million in deals, in my career, as well as the other different companies that I've done. And, you add those up, that's probably another 100 million in business volume. But, it didn't happen overnight. It wasn't like I could just go do it. I had to learn. I had to become an expert. I'm a leader, delegator, motivator. I outsource and leverage, and I find professionals that are very good at what they're doing, managing the different asset classes, because there's experts in each one of those areas that I hire and I use to manage those assets to their fullest. So, I guess that kind of speaks to your question a little bit about, how that happens and what happens. It's kind of like the old joke, right? A doctor hits a certain point and they go buy an airplane. Next thing you know, they crash and burn, right?
That's right.
So,
Yeah.
Real estate's the same thing.
I love what you said on a couple of things there, Greg, is collaboration. My youngest business partner on a land deal is where he's doing all the work and we're putting up all the money, is 18 years old. And he's a guy that decided he wasn't going to go to college, but he wants to get into real estate. Sharp guy, and good for him knowing what he wants to do, right? And then I have mentors and coaches that are 88 years old. So anywhere between 18 and 88, I've got these people, and I'm down in the Naples, Florida area now. In Naples, the average age is deceased. Okay, so if you wonder how are there business owners down there that are 80 years old that own storage units or mobile home parks or multifamily stuff that just say, you know what, Jim, I just don't want to do this anymore, right? Now, by the way, I don't have to be the guy that says, well, I'll do it at 53, right? But I just need somebody 35, 40, 45, hey, maybe 65 to run it for me, right? And I'll partner with them and I'll show them how to get this guy to help us buy the business, because you said you bought businesses and started businesses, and I own 9 businesses, and we've bought businesses for very little money out of pocket on an earn out basis. If you understand how to read the books, right? I'm not going to be the guy doing the books, but right. I can read the books, and we can come up with ideas on how to make an earn out, buy it on an earn out basis. And that gets really fun. Okay, well, that's what I bring to the table. Maybe I bring some money. And if I bring somebody who wants to work their butt off and become the owner of the business, like you said, and grow it, right? Then that's a beautiful thing. That's collaboration.
Right. And I love what you said about the numbers. So whether it's real estate or a business, it's all about the numbers, right? And that's what's really cool about it. When you really drill down deep into the data, and that's what I'm very good with, is I know the numbers of the businesses that I'm in, the asset classes that I'm in. I know what it takes to build them. I know what the costs are. I know what it takes to turn something around, how much you need to invest, things like that. So once you know the numbers, then you intimately know the business. It's like the anatomy of the body for a doctor or a physician, right? Once you know the basic human anatomy, you can diagnose a lot of things and you can fix a lot of things, and you know what to look for. Same thing in real estate, same thing in businesses. When you know the numbers of a business, you know the anatomy of a business, so you know how to troubleshoot, you know how to fix, and you know how to keep it healthy, right? And then, I love what you say is finding great operators to partner with. And that's kind of what I've done my whole career, is I have been that guy for a lot of people, and then, working with me. So people come to me because of my expertise, the deals that I do, I just make it easy, right? It's, at any given time, I've got any number of deals going on, whether they're, multifamily, hospitality. I don't do anything in the office or retail sector. But right now I'm focused on hotels. I've got some hotel developments and some multifamily projects I'm working on, doing some ground up stuff, as well as purchasing existing assets, value add. I'm opportunistic. I like heavy value add or, complete redevelopment or ground up, type projects. So, with the experience I have, it's a safe place for somebody to go and, just like you said, partner. So they put up the money, I do everything else, and then they get a great consistent return. They're part of a really cool project, and they get to live vicariously through me while they do what they do, and they don't have to worry about it, whether it's working or being retired, right? So that's one way. The other way is where I've been the guy, just like you, where I come along, and now at my age at 51, what I bring to the table is the intellectual capital. So I'm an expert at a certain number of things. So if I get involved, that's what I get involved with, is I've got the connections from an equity standpoint, that if it's a company that has the ability to scale, well, then I can bring the capital to the table as well, through equity partners. But what I bring primarily is my expertise and my contacts. On the real estate side, I bring the deal. I'm very good at finding deals. I'm very good at creating opportunity. I'm very good at getting things done. So I lead the teams on development projects. I've got world-class architects, engineers, general contractors building these projects. I lead the charge, lead that team. I spend my time pretty much all day, every day on the road, scouting projects, looking for land, looking for opportunities, vetting deals. They're big deals, 25, 30, 50 million. So I put feet on the ground on every single deal that I look at. I don't do anything virtually in that regard. I'll look at something on the internet first before, just to kind of vet it, make sure there's an opportunity there. And then once I know there's an opportunity, then I'll drive to that location or fly, put feet on the ground, meet the people involved, and and do it that way. And then I keep up with it as it goes along. So that is, one of the ways people can get involved, in asset classes and different projects and different types of investments. Totally passive, where you're just a passive investor and you just, like you said, you're just getting a piece of the pie, a return, but you're still part of something. You can be as involved as you want or not, or you could come alongside and be a straight up JV partner and be a little bit more involved in the activity. I mean, I've got one guy who's a doctor who just loves to go by the projects. He just likes to go by and see it, right? Just because when he's off, it's kind of like a hobby for him, right? Yep. He doesn't do anything. He just likes to go see it. He likes to walk around on the job site, put his feet in the dirt and smell the construction. A construction site has a smell, right? And it's just, it's really cool. And then, the third way to do it is, if you're going to do some deals yourself, then find, like you said, find a mentor, find somebody that's an expert in the asset class that you're interested in, and, hire them to teach you how to do it and walk you through it and help you do those deals, so that at least you've got somebody that knows what they're doing. Every medical professional has gone through a residency, right? What is the residency? It's a mentorship. You're learning, you're being taught, and then everybody has an overseer after they're out in their practice. They've got somebody they're accountable to. They've got continuing education. They've got boards that they're accountable to. And in a lot of cases, they have mentors, that help them along the way. And, it's kind of like a franchise, right? A lot of people get involved in franchises because it's a proven system. It works. There's no guesswork. You follow this system and you're going to make money. So it's a fairly easy thing to do. You still have to pay attention to it. You still need to know your numbers and you still have to go through the training. But it's a predictable business model, and investing in commercial real estate, or even residential, can be the same way if you've got the right operator that knows what they're doing, and understands and can keep you informed and knows their numbers, so that's the key.
What I love about what you just said too, Greg, and just listening to you for the last, 15 minutes or whatever it's been, is the confidence. It's not like, hey, I think that this is what we can do, or this is what, it's very confident. Now with confidence, confidence is a skill set, but it comes by preparation, right? So you've done all of this stuff. It's not like it's a theory of, hey, I think that here's where I think the market is going with Wall Street over the next 12 to 24 months. And what we're going to do is we're going to do this modern portfolio theory and blah, 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 dollar cost averaging. And here's why I think this company is positioned for growth, where you don't have any control over it. Right? I mean, that's what Wall Street tells us to do with our money. And so many doctors, they put 58,000, whatever the profit sharing limit is for this year, like clockwork, into those profit sharing plans. And it's a government control plan in Wall Street. Now you're going to play a game with the government and Wall Street. And they know how to play so well, Greg, that you don't even know they're playing. Right? Now, if you're in real estate, and if I go buy, let's say I want to build a hotel with you, right? And we go build this hotel. Is there any way we could lose all of our money? I mean, if the hotel burned down, we'd have it insured, right?
Right.
We wouldn't put a hotel where it wasn't growing, or we were going to have flow and everything else. I mean, the chances of you losing everything, but when you go put your money in Wall Street, the chances of losing everything is there.
Yeah. And that's an interesting thing. So that's, Wall Street, I mean, it's legalized gambling, right? We all know it now. The system's rigged with, high frequency trading, hedge funds, things like that. The average investor is at the mercy of every whim. I mean, when somebody can go on CNBC and say the sun will come up at 7:15 and the market changes 500 points either way, because of some comment, I mean, that's pretty telling. So over the long haul, the stock market has been a consistent, predictable animal, right? What we've seen in the last 10 years, and particularly after 2009, it's gambling. It's Wall Street. I mean, it's Vegas, right? It's legalized gambling. It's Vegas brought to the general public in every household that anybody can log in, create an account with E-Trade or Scottrade or whatever, and then start playing around. And even I did it. I never did anything in stocks or equities or anything like that until 2009. And when the stock market hit the bottom, 6,000, I bought in. When the Dow was at 6,000, S&P was 600. I bought Ford stock at like $1.90. I bought Citibank when it was like, or Bank of America when it was like $1.19. I can't remember now. Right. And I just got in and got out, right? So I wrote it up a few dollars and then I sold it and just, I said, hey man, I'm a genius right now.
Yeah.
Looking back, had I kept that in there, man, it'd be worth a ton right now. But it's kind of like the Bitcoin thing, right? It's gambling. It's dangerous. There's just too many things against you. And like you said, during an economic event, that stock can vaporize. That company can close and the stock can be worth zero. Like we saw in the case of General Motors, the government came in and diluted the stockholders, right?
Right. Absolutely.
So things can happen. When you own real estate, you own a tangible asset. Okay. So let's say something happens and all of the real estate becomes worth zero. So the valuation is zero. All right. Well, you still have something if you have the right kind of asset class. Okay. And if you look at asset class, you look at your core services. People need to live somewhere. So whether you own, houses, or you own apartment buildings, or you own condo buildings, or, even hotels can become housing in a bad economy, right? So if you own those products, you still have something that's worth something to somebody. So let's say that our world economy collapses and our currency is gone, right? And the monetary system just doesn't exist. And we're on a barter system, okay? And you have to trade. Well, if you own housing, well, you've got something that's worth something that, at least at the worst case scenario, you can trade. It's still going to bring you income. It's still going to bring you things. You could trade it for chickens, cows, cars, whatever, right? Gasoline, those types of things. So that's a very extreme worst case scenario. But, let's say the real estate, the asset becomes worth zero. There's still income coming in from that asset. And if you don't over leverage, and if you place good, inexpensive long-term debt, which is a great thing right now, as we know the Fed just said they're not raising interest rates. I don't see any real catalyst for interest rates to exponentially grow in the next 10 years, because if we have another economic event, that's just going to drive rates back down, right? We haven't had hyperinflation to the point to where milk is $10 a gallon and gasoline's $10 a gallon and, things like that. We've had some inflation, but it's not hyperinflation. So that will spur the Fed to raise rates, right? If costs start getting out of control. The only costs that are out of control right now are just basically construction costs because there's so much going on. That's supply and demand. That's going to change. Once the market's oversupplied, things will change. The costs will come back down. So that's a temporary thing. Interest rates are the real catalyst of an economic event. And right now there is nothing on the horizon that's going to drive those rates through the roof. So when you think about that and you look at the different asset classes, of commercial real estate, right? You got multifamily, you've got office, retail, industrial, right? And then you have land. And you look at those sectors, retail's overbanked. Almost anywhere you go, retail's not a great bet right now, right? With Amazon and the way the retail landscape is changing, shopping malls. If you look at office, same kind of thing. Everybody's working virtual. I'm in my house right now. I work out of my house and I'm on the road all the time, right? So my car is my office. And, from site to site, project to project. Now my team that works for me, a lot of them have their offices, the general contractors, architects, engineers, things like that. But a big portion of the workforce out there is going virtual and working from co-working spaces, public spaces, and their houses. So office is a sector that's under pressure right now. There's a lot of vacancy in the office sector. Now there's little pockets here and there that are doing well, but overall as an asset class, office is under pressure right now, just like retail is. So what does that leave? That leaves industrial, which mobile home, or not mobile home, but self-storage falls under the industrial sector, which is very good, very predictable. Large industrial for people around the core services of the shipping industry, for goods and goods that are being shipped, Amazon, places like that, and people that serve Amazon. So that's a good place to be. And then of course, housing. You just can't lose with housing. People are always going to need a place to live. Healthcare, people are going to always need healthcare, doctors, dentists, orthodontists, things like that. People are always going to need legal help pretty much. So law offices, those are, if you're gonna have an office, that'd be a great one to have, legal and medical, professional services that have to have an office for the most part. Even attorneys can work out of the house and things could go that direction at some point. But at the end of the day, you got to buy gas. Cars, we're not going to be 100% electric in our lifetime, probably. Mm-hmm. I'm 51, you're 53.
Yep.
Yeah. So I don't think we're going to see all electric vehicles. We may get there someday as a nation and as a world, but not in this country anytime soon. So people are still going to have to buy gas. So those are great assets to own. People still have to travel for business, especially the more virtual the world gets, the more travel that they're going to do. So the hotel sector is still good. There's still pockets where that's undersupplied. If you're looking at the right metrics, your numbers, how to evaluate a market, where you can put a hotel and where you can't. And then, like I said, healthcare, education, food. People have to buy groceries. They have to buy food. So when you look at those types of assets, those are good, safe assets to own that aren't going anywhere. You buy a stock in a company, you got nothing. You've got a speculative guess that this thing's going to be there and continue to produce at some point. And as we know, big businesses that we all thought were safe are closing every single day. Toys R Us, Sears, Kmart. It's just, day after day, you're hearing of some iconic brand, Gap, that are closing stores left and right because of the way we buy and shop now. So anyways, that's my take on safe asset classes. If you want to get into real estate, that's where I would be looking. Housing primarily, and that can be anything from single family to multifamily to mobile home parks to, condo buildings, apartment buildings, and even some hotels that are, senior living is another one too. We've got an aging population, like you said, especially where you're at. Senior living and that whole environment is changing. Senior high rises, senior apartment complexes for age restricted communities, things like that. So there's some really great asset classes that have yet to reach critical mass that I'm looking at and investing in right now.
There's always opportunity, but what I really like what you said there, Greg, is, I would rather, most business owners, most people like you, like me, would rather buy assets than financial instruments.
Right.
And, business owners really buy assets. And what's kind of interesting is, again, being in the area that I'm at in Florida, is sometimes people build these businesses, they sell their businesses, and then they buy instruments. Okay. And if they want to do that and they don't want to be involved and they just want to live the rest of their lives, I always worry, for me, I would get bored. I'm I'm 53. I don't see myself, quote, retiring. Retiring means to be taken out of service. That's the definition of the word retirement. And I don't want to be taken out of service, but I want to do what I want to do when I want to do it.
Right.
And if I were starting when I was 25, I would have a 10-year plan to say, by the time I'm 35, I want to do what I want to do when I want to do it. I'm not killing myself now. So I could do what I'm doing now forever and still go to the beach and still play plenty of golf and fish and go on the out on the Gulf and everything else. So
yep, same thing here. So like I said, I'm leveraging outsourcing and utilizing other professionals to handle the day-to-day, so I can be anywhere, anytime, and my business still functions, especially with development projects. I have management companies that manage all my assets. So there's hotel management companies, just like there's apartment management companies, just like there's residential management companies, just like every asset class, there's professional managers. So I have managers that manage the day-to-day. I manage them. I'm an asset manager. I manage the managers, and I manage the human capital, the human assets that I have, general contractors, architects, engineers, things like that. So it allows me to be, whenever, wherever. But yeah, that, financial instruments. So what's the safest financial instrument today? If somebody says, look, I do not want to lose my money, I don't want any chance of losing my money, where do you put that? What's the safest financial instrument out there right now?
Well, I would say that infinite banking, but I don't know if you're familiar with that concept or not.
I am, but let's take that out of the equation. So I'm talking traditional, mainstream.
They might say cash. Somebody might say cash or treasuries,
right?
Treasuries. Yeah, sure.
Okay.
Yeah.
So treasuries is the answer I'm looking for. So look at our national debt right now. Okay.
Yeah.
What if China and all these other countries say, we're not going to buy any more of your debt. We're not going to loan you any more money. What happens to T-bills?
Oh yeah. Yeah.
You know what I'm saying? So that right now, from a Wall Street, traditional financial management model, everybody's being pushed into treasuries for the safest long-term bet for your cash. If you've got, serious liquidity that you need to protect, you can't put it in a bank, right? Because banks can fail. We've all seen that.
Sure.
So everybody thinks treasuries, the United States government, our money is always going to be king, right? Which I believe in king dollar. I believe that, the United States dollar is always going to be the currency of the world that's going to be the safe haven. But treasuries, on the other hand, is a little different. And, that's a debt-backed instrument that we can no longer service, right? We're making more to pay what we have to pay on. That's a very dangerous position. So your infinite banking is a great concept because that's something you control. It's something you own. It's something that's not going to get wiped out by the government or anybody else. It's your own cash. It's your own instruments that you've created, and you have control over it. Just like your real estate assets, you've got control over those. So that's kind of where I was going with that.
Yeah, no. And my brain is so anti anything that the government controls my money that treasuries didn't come up in my head, because I know that that's not, and if I say cash, I know that the FDIC has $88 billion of reserves, but there's 7.1 trillion of deposits. So you're not insured there either. Guess what?
Right.
So when you say that, my brain says, I want to own something that I can insure that, and when you use infinite banking, I'm going to go do all those things that you said, right? But I've got this money pool. Now, how do I deploy it? And if I were somebody that, Greg, are you looking for more investors? Are there opportunities with some of the projects that you have? And how would people find out about that and learn more about it?
Yeah, absolutely. So we always are looking for investors to come alongside of us in our projects. And, we do everything. We take care of all the heavy lifting. And it's a passive investment role, but they can, like I said, they can drive by the jobs and look at them, whatever they want to do, or not pay attention at all. So yeah, so my website, gregdickerson.com, has all my contact information on there. My phone number's on there, 434-326-3903. Email greg@gregdickerson.com. And it's all on there at gregdickerson.com, a little bit of information about us and what we do. We're working on some opportunity zone projects right now. There's a lot of talk about those. That's a place to park capital gains without the restrictions of a 1031. So there's a 10% write down at 5 years. If you keep the money in 5 years, you can take a gain, invest it in one of the projects, write down your capital gains due and 10% in 5 years, 15% in 7 years. And then if you keep it in there for 10 years, then anything you make on that gain is tax-free. So it's a very attractive vehicle. People can look at a lot of information out there about opportunity zones. And we have about 8 projects right now in opportunity zones that we're bringing out of the ground it's a place for that capital to go, but it doesn't have to be opportunity zone capital. So we place capital in all our projects. We use it for the equity side. We never go more than 60%. So we always raise a minimum of 40% equity in our projects, so we're not over levered, and we get better interest rates, and it's non-recourse. So, the first thing everybody's interested in, every investor, is preservation of capital. By picking the right asset classes and the right locations, we address that concern. It'll never go away. Worst case scenario, if the world collapses and real estate's worth nothing, we still have cash flow. We still have income, and we still have something we can barter at the end of the day if we ever reached Armageddon, right? And the dollar's worth zero.
Absolutely.
So that's how we preserved capital. And then the rest of it's gravy. We do have some very good projects with attractive returns, typically 3 to 5 year periods, and then up to 10 years for the opportunity zones.
So one of the things that, one of the habits of billionaires is they say they always stand next to the smartest guy in the room. So like Steve Jobs, he stood next to, what's the guy's name? Starts with a W, which it was his partner at Apple.
Warren Buffett.
Or
Steve Jobs, Wozniak. Yeah,
Wozniak, yeah, right. I absolutely couldn't.
I'm thinking Bill Gates and Warren Buffett. Yeah.
Yeah. But, it's stand next. So, what I would encourage people to do is if you want to learn more, obviously Greg is an expert. Obviously he's smart in this area. We're not saying whether this is right or wrong for you. You got to do your own due diligence. You have to think, audience, this isn't, hey, there's no such thing as a no-brainer. Go do your due diligence and your homework. But this could be the right thing for a lot of people out there that are looking to get involved but don't know where to start. So Greg, I know you have another commitment. I want to make sure that I'm respecting your time. Real quick, tell me one book that everybody that you talk to, you say you got to read this book.
Yeah. So there's 2 recently. One is Principles by Ray Dalio, hedge fund investor. It's all about the numbers, right? Scientific, let the data make the decisions.
Yep.
Then Happiness by Harry Edelson. Harry Edelson was the most quoted man on Wall Street, and he created 12 unicorns. He's on his 13th. A unicorn is a company valued at over $1 billion. So he's a venture capitalist, very successful. And his book is incredible. It's about, having satisfaction in life, living life with zero backlog. Harry Edelson is a great guy. I've enjoyed, his stuff. And, what I like about him is he has zero backlog in his life. I operate the same way. I'm never behind. I take care of everything right now. The best time to do anything is right now. So whether it's email, whether it's mail, whether it's, whatever the situation is, I make the decision and we move on. And that way I never wake up, with just this huge list of everything to do. I take care of everything at the end of the day, whatever reading I have to do, whatever emails I have, everything's done. So I'm clear.
You sleep better that way, right?
Exactly. So that's it. And
awesome. Well, yeah. Greg, thank you so much for sharing your time and your expertise today, and your enthusiasm and your
Yeah,
confidence,
absolutely.
which is definitely something that I appreciate, and I'm sure the audience does as well. So until next time, if you want to learn more about Greg, gregdickerson.com is the website. If you want to learn more about Create Tailwind and how to fund some of these projects that you might do in real estate, go to createtailwind.com. Until next time, thank you. I'm your host, Jim Oliver.